Okay, Saturday morning. I'm just going to do a quick run through the markets. I've just uploaded my market models to the chat group just now, and I thought I'd just do a video and we'll just run through some big levels again. First things first, I have one, maybe two spaces coming up in my inner circle trading group. So if anyone's interested in that, send me a message on Twitter, and we'll take it from there. I can go through what it's all about. Obviously, usually people know what I'm all about before they join anyway. But anyway, trying to keep the turnover down. I've got a lot of work going on in the background before the market turns on again for us. I've been streamlining the sort of courses in a module form in the website, in the inner circle part of the website, and just doing a lot of stuff behind the scenes just to make the hours I put into this, the work I do myself for trading, I share it with the members. So, I do a few hours in the morning, I do an hour in the afternoon, and then I do an hour's screening session in the evening as well. And I do that every market day. Around holidays, of course. I need more holidays, but I do that every day. So it's what we do at Trading Basis is not one of these. Give me £500. I will teach you how to be a consistently profitable trader in an afternoon seminar. No, that's not what we do. What we actually do is we do something every day, and we approach the markets every day. So we see the markets evolving every day. It's everything in a very slow, drawn out process, and risk on, risk off, and through all market cycles. We don't have any magic, that's not what I haven't got a magic indicator for you or anything like that. The game is it's more about building a methodology, and it's not my way or the highway either. It's we will all end up being buyers of, we want to capture trends in stocks. We'll be buying breakouts, or we'll be buying pullbacks, or some people might be doing something in between, like that dog over the fence there. But hopefully you can't hear him in the background. So we will all be looking at stocks in the same way. We want to ride rising stocks, we want to avoid falling stocks. And I just think it's to fast track all the mistakes that I've made in the past, and I've been doing this for quite a few years now. So people, I've been working with traders and investors for a long time now, and I kind of know all the problems, and I know where the leaks are, and I know where people get too excited and are chasing, and people are too scared to put money in the markets. So I've got a pretty good feel of this now, and we've been doing it for a long time. So there's only so many spaces, because if I have too many members, it soaks up new members, it soaks up a lot of time. So I like to let people settle in gradually. I'm not selling you a dream here. I'm sharing a huge cache of work and time. So from here, I think what I'll do is I'll just, you might just want to, I don't want to just divert you straight away to ShareScope and disregard this video, but the last article I did on ShareScope, tuning out the day-to-day noise, big picture levels, it's in ShareScope articles. And we're just looking at some big picture levels on these markets. It's easier me just go through them this way than bring them up on the charts, to be honest. And we're looking, these are some pretty big picture levels. Now, where we are at the moment, the market is actually, it's acting okay this week just gone. We've had some pretty good action on some pretty bad numbers. And we are in an area where there's been a lot of destruction, and a vicious short covering rally, could happen. We've got a lot of stretched correlations out there. look at these markets here. I'll go through them on the charts as well, but patience is key. Markets, we're in an area where, I suppose, with the pandemic, people expected us to, newer investors expected us to go to hell. More experienced investors, including myself, expected kind of a little bit more wide and loose sideways action following it. But the methodology through the setups, and I bought the setups regardless of what I thought in my own head. I have to take my pitch, and build on success, and that's what we did. Even though what I thought and what actually happened, I don't trade on what I think. I trade on what is happening at the right hand edge in front of my eyes, and that's why we had a fantastic market run. And it went on a lot longer than anyone would have thought. That it was a big move, and this is pretty normal action coming back into some big levels. Now, coming into the levels is pretty normal action. What follows, we don't know if we're going into a recession. If we do, we're probably more than halfway into the pullback. Who knows? In time, we're definitely halfway in. I would have thought. Who knows? I would say halfway in on the worst case scenario, but history does not tell the future. So some interesting levels, on the TLT and the IEF, the 7 to 10 year, with these big 200-day moving averages for me. And the FTSE 100 looks like it's in a big base, and this is basing out still at the moment. Small caps, if we're going lower, I expect them to come into this sort of area, and Bitcoin's already in this area. This is an obvious area, and I would say down to this prayer high here is an obvious area as well. Very technical sort of technically Bitcoin is a fantastic technically trading product. If you look at it through percentiles, it will be boom and bust volatile. I understand that, when something halves in price every so often. I understand that. But technically, it is an extremely nice trading instrument. Has been anyway. And UUP, it had a little rest, and then it went sort of based out and went straight back to highs. So we'll have a look at that anyway. But the trend has been pretty strong for some time. It looks like we're seeing some sort of, I wouldn't say blow off yet, but it wouldn't surprise me. Anyway, that's the share scope. Tuning out the noise. If you go into share scopes and just go back, you can see my other articles in there. Moving on from that. So going forward, and I'll just make one more point. You don't want to visit my site at the last minute and think you're just going to be kind of cloning the way I trade and killing it. It's not going to work like that. Anyone who visits my site gets lost in the website for 3-4 months and soaks in all this information and comes to the live screening sessions and sees it in the sees it unwind in front of them, the process and how markets trade. We learn about how markets trade and how stocks trade and the action they kind of have. And the job is applying money management to the price action. The amateur, the newer, greener investor will just think, well, it's all about entries. You just buy, and how do you buy and how do you sell? But it's not that. That's the easiest part, Buy breakouts, buy pullbacks. That's dead simple, isn't it? But it's more stock selection. Which kind of stocks will offer the trends? Which are efficient? Which are inefficient? So there's a lot of that what goes on. Defensive sectors, aggressive sectors. Watching these things sort of, fill in, and we're in a part of the market at the moment where we want to see which sectors are starting to fill in because we know which are in play. And next up, I'll just bring up the. I'll try to. There it is. Sorry, I'll try again. There it is. The this is my index dash, and this has got the S&P loaded at the moment. The S&P is, the phases of the S&P. Emerging bulls 5%. 5% of the S&P is trying to rise over the short time frame. Bulls 21% still bullish. A lot of those are oilers and defensive sectors, as we know. Emerging bears 40%, bears 30%, 26% bullish overall. And I run my trend models, my risk model, and I allocate risk, heat, depending on the index trend model. And that's reading for the UK and US, it's reading at just under 2% at the moment. So it's on empty is basically what I'm trying to say there. I'll bring over the trend models as well from the chat group as well in a minute. But these it's the phases rolled over, and you don't you might not believe they're going to roll over, but you see it in the screens, and it's a very slow process. And at the moment, the FTSE 100 is flicking between sort of correction bull and emerging bear. It flicks up and down, and everything else. I mean, look at these: copper, gold, silver, palladium. They've been bearish for quite some time now, and nat gas, gasoline, crude, bullish. Yeah, we know that. They're in deep pullbacks as well, potentially rolling over, but dare I say, in the crude, potentially rolling over. And, dollar bull, that's another one. That's been bullish for quite some time now. I will just note that the oil rally started before the war, and, it made a huge run off the lows before the war, and it's probably trading around the same area now. I think I read something last night that it's about the same price as it was trading on the start of the war when Russia invaded. The price is still around that area, so it's a little bit of a pop on the war news, and then back to trading in that sort of area. So if it stays in that range, that's kind of happy days for the oil stocks, but not happy days at the pump, is it? Anyway, so markets consolidate through time or price, and coming into these levels, we'll just have a look at this one back in 2015. It took a little bit of time, but in this area, lots of constructive. There was another known news event over here, wasn't there? The presidential election and the Brexit vote happened over here somewhere. So there was a couple of events what happened off the lows here, and this is a 50% retrace back into the range where all that volatility was still happening. So yeah, we could be here, and we could have another spike lower. But constructive charts, I'm seeing a smattering of constructive chart price action, but I'm still seeing it in defensive sort of sectors, and we want to see the aggressive sectors start to fill in as well. And I'll actually cover how you want to look for these stocks, because it might be a case of the market makes an almighty run, as it does, and you still don't see the constructive stocks. Some stocks will break out and just get extended. You didn't believe them; they just broke out without consolidation. But for that kind of stock, when the market starts to consolidate and move again, and it did this for 1, 2, 3, 4, 5 months up here, and there was good stocks, setting up all the time and starting to unwind. So you'll see these stocks will pull into pullback areas with the market as the market digests, and then they will fire off new signals. So it turns into absolutely no setups. The occasional setup, sometimes in defensive areas, in commodities what are in play, and then it turns into, start to see some leaders. You'll start to see leaders before the market bottoms as well. They'll kind of show you their card before the market bottoms a lot of the time. It might just be an earnings breakout, and then they'll start to drift after that, and then they'll set up again. And so you'll have an idea on some of the good stocks to watch, so long as they don't trade all the way through those forward numbers sideways into a new set of a new earnings year, and you know, that happens as well. But I mean, it's always a moving playing field. So you know, and then you'll start to see everything move, and it will be like a little bit too much is happening here. You know, what should I be doing? You know, it's too many signals. So that's how it tends to unwind. You know, it's done that since you know, well, it's always done that. It just is what it is. So let's go through these again. The transports, it's what we sort of consider the leader. I'll put these big time moving averages on. We'll look at nothing else bar the monthly and the big time moving averages, and you know, you can see why the zone's interesting, can't you? Same again, you know, we're already in an interesting area on the Dow. I kind of hope we puke, but we still see the strength in the trend models, and I'm going to bring those up as well. You know, I hope we're going a bit lower yet. You know, there is bear flags out there, I will say as well. You know, it looks a little bit bear flaggy on some of these markets. You can see it drew one on the Nasdaq 100 there. It looks a little bit bear flaggy in the markets here. So I think a little spike lower and run the relative strength screens again. See which stocks are booking the trends. See if anything new's coming into it. You know, there's a bear flag there as well. But these are daily price action, and we're kind of looking big picture here. The easiest thing in the world is going to be finding the stocks which are trending. It's, you know, they just hit the screens end of day, and we don't have to force it. We don't have to look before it happens. You know, they will just sort of set up, and this is kind of a little base within a bigger sort of pattern on the FTSE 100. 250. So I'll just say, you know, that the FTSE 100 year to date is about -3%. I think something like that year to date. Off highs, it's about 7%. The 250, 20% year to date, 23% off all-time highs. The 356A, you know, same as the FTSE, just about 100. Small caps, 17% year to date, about 19% off highs, and the AIM all share, obviously more, 28% year to date, and 33, you know, these are from a couple of days ago, these prices, 33% down from all-time highs. So this is the small caps, you know, bigger picture level. Also a thing to note, and it's something we kind of, you know, I trade small caps. We see the 250 and the small caps kind of rolling over before the more efficient markets as well, if you went and studied that. And that's the aim. Horrible market. I prefer just looking at the fully listed small caps. It's a little bit, you know, more meaningful than the AIM all share, even though we trade AIM, a lot of us. So, you know, if we're going lower, this might just have a rollover and spike down into this level, is what we're trying to say there. But we've got a first area of sort of focus up there. Next up, this is very in-depth, isn't it? I'll just bring over the chat group and so this is closing highs. It's something I monitor, and it gives me a very, you know, because I've been sat in front of the screens from sort of well over a decade, through the tail end of the 2008 bottoming process and on from there. Basically, I've been in front of the screens every day, so I've got a cache of information on how the markets move up and down using my own way of modelling it. So crickets and popcorn is the scale. You know, we're popcorn up here and we're crickets down here, basically. And you know, it's actually not hit the popcorn levels this year. It's been middle of the road, and you know, below 100 is crickets. You know, that's all we can hear out there. Crickets to popcorn scale. So you could even draw a trend line down that if you want. you know, it's coiling up but refusing to, you know, it can't go much lower than that, can it? Naught's as low as it can go. So yeah, interesting area. It doesn't mean it's got to move because it's there now. It could go sideways forever there. Who knows, you know? But the 350 trend model, I'll just want to get through to the index trend model. Price action is 0. You know, trend, longer term time frames are hanging in there still. But this is what I want to just show you, the 350 trend model and the index trend model. And you know, as we live with this over the years, we never sort of, you know, we like to think that the 350 trend model is a little bit of a leading indicator. And off the lows, because the way lows are put in, it actually seems to be, you know, stocks start to rise. You know, it's a market of stocks, but you know, we see the 350, you know, the stocks starting to lead the market is what I'm trying to say. It's a market of stocks. And on the way down, you know, the market model could, you know, this is what we call embedded. This is where all the stocks are in melt zone. We should be loaded by the time it gets embedded. You know, I'm on margin in this area, and then, you know, 350 trend model is rolling over, and stocks are starting to give way a little bit. And then we go back to highs, put a new reading in. 100% bullshit went there, and then down it came. And you know, the trend model is extremely slow. You know, the rollover. This is where the trend model starts to override my own stock trailing methodology, and I start to get pulled out of the market on, rather than my predefined trailing stops. I get pulled out because the market model is going down, and I have to lower my heat to that market environment. So that's what tends to happen there, and that's what always does happen. The faster it rolls over, the better it actually works for us. It's a little bit tedious in a slow rollover, but in a market crash, you know, lo and behold, it was fantastic. I will say that the pullback in this area here was pretty similar to the pullback in the market crash. There wasn't much between it in the account. So we've got a little tick up here. We'll see if we can hold above. We've got a trend model crossover signal. So we'll see if we can hold above there, and we'll see how that plays out. So let me just basically move this out of the way again. So when it comes to the buying of stocks and you know, looking for the leaders, the market might hold these levels. We might see some spikes in stocks, and then the market might correct again. You know, the market might have a little bit of a reversion to mean. We've had a couple of reversion to mean sort of moves, haven't we, already? Let me just tidy this up. Mean trend, and we had this spike here. So this one here, and I'll tell you, on every one of these throwbacks, you know, that's the supply. This is the supply, and bounce we did up into supply. We ran out of steam, as it tends to do, and then over it goes again. Now, we want to see what the bears have got. Well, the bears had it here, didn't they? You know, went straight into supply, rolled over. I'll just, you know, this is a pet hate of mine. People get bent up on these previous levels and call them support. And, you know, these are not support. These levels are previous highs, you know, becomes support. Not previous lows of a previous trend, what's in the rearview mirror. It's absolutely meaningless. So on the way down, what's resistance is in play, not support. We haven't got any support until meaningful support until these big levels down here. It's just in free fall. You know, there's none of these levels on the left hand side mean anything to us. By chance, some will line up. It is what it is. By chance, some even round numbers will line up. Support is not in play. Resistance is in play until you see a price action reversal. Dow theory. Then you start looking to see if support can hold. Obviously, support being that line. So, we've just got big picture support from a huge level prior, and maybe this little area here might be a little bit, these are the last meaningful levels. All this is secondary. It might have been primary on the way up, as you can see there, but it's secondary to us now. Big picture levels are the only things what are worth looking at. When it comes to stocks, you might see some stocks breaking out on earnings and stuff. I'll just go to, CER is the classic, I suppose. You could go to Next in 2011-12 as well, NXT. But, before the market crashed, CER, obviously you can see it hit our screens, pullbacks and breakouts. It hit it here as well. And it made this great move. And then it just pulled back into the base. So this is what you're going to be looking for. When the bears have their last hurrah, you want to look for the leading stocks might do this. Some might not pull back. Some might go sideways in basing action. So, just note that. It's they're going to be blindingly obvious. If you run a relative strength screen, say just go back 3 months maybe, or to the last high of the market, to the low or something, and run a relative strength against stocks, you'll be looking for stocks that are stronger than the market, or at least just hanging in there. I'd say not weaker than the market by 10% or more. There will be good stocks just under the surface as well. But this is how you're going to be looking for your market leaders, and they will show their hand. And you might not believe them at the time, but they will show their hand before the market really constructively starts to look good. It's a market of stocks. So I think we've covered, that's a pretty in-depth look at the market. Go and have a read at that share scope. You'll get a good idea how I trade. And like I say, I've definitely got one. I've maybe got two spots coming up. And I'll be honest, at the moment I've just been taking yearly memberships, and it'll be the best if you're interested in learning some pitfalls, learning. It's a great time. I think you don't want to. The great time is in a bad market to join my site, because you learn about the markets before the market's ready. Once the market's been rallying for so long, you're at the you could be mid bull market, and that's not the best time. We never quite know where we are in the cycle, but it is a great time to sort of get on board, is what I'm trying to say there. Okay, that's my sales pitch. Not that I've got a very good sales pitch. So I will leave it there. Enjoy the weekend. Stay out of the sun. Don't drink too much beer.